So guys, I've been fumbling around with a lot of schoolwork. I have a lot of classes right now this semester and I've been really busy, but I got some free time and my mind was like, yo, BK, you need to find some new stocks. And I started researching some of the stocks my friends were talking about, some of the stocks I heard about on YouTube, and I think I found one that I really like, guys. Planet 13, ticker symbol PLNHF. So, let's get into it. Alright guys, welcome to my channel. This is Let's Become Billionaires and I'm your host BK. If you've never seen this channel before, please stick around, watch some more videos after you watch this one, and I hope you enjoy. But with that being said, guys, we're going to be talking about Planet 13, a Mary J stock in a brand new industry that is still a baby, saying nana goo goo boo boo gaga, because guys, it's a young industry and it's growing. And this is the company that I believe is ahead of everybody else in the Mary J space. And so I want to get into why in a second and what are a couple of catalysts I see going for this company. But first, we're going to start off this video with a basic info with some financials as well. Very simple stuff to get you in the right mindset to understand why I think this company is so cheap and undervalued. Then we're going to go into some of its growth catalysts. So the three growth catalysts we're going to talk about today is going to be number one, that guys, they're growing very fast and they're extremely cheap for how fast they're growing. In this section of the video, I'm going to compare this stock to Walmart. Now, yes, I just said Walmart. If you're confused as to why, it's going to also include a Peter Lynch quote where we talked about how Walmart was a great investment. And I'm going to talk about how Planet 13 is almost the same thing as Walmart, except just in a different industry. Now, after that, we're going to be talking about a possible acquisition. I'm going to go over some cigarette companies, some of the struggles they're facing, and I'm going to talk about why possibly buying a Mary J stock is going to be their best option. Because right now, as it stands, cigarette companies are struggling a lot, and we're going to get into that in that part of the video. The third part of the video is how they're redefining entertainment. So guys, remember how you used to go with your boys or your gals or whoever it might be to the sports bar and you would watch a Lakers versus Celtics game, or you'd watch whatever game's going on, hockey game. I think this is going to change. Now, I'm not going to say that that's going to be disrupted. I think people are still going to do that. But there is a brand new segment of entertainment coming that people are not aware of that I'm going to introduce. It is something that I deduced from reading the presentation of the company that I haven't heard anybody talk about on YouTube. So if you guys are interested in how Planet 13 is going to reinvent entertainment and how you enjoy sports at a bar, I'm going to explain that in this video. So guys, with that being said, let's hop into the very basic financial overview along with the overview of the company. So in terms of the financial overview, this company is very cheap from a market cap perspective at only $500 million. On top of that, the stock price in terms of the US markets is $3.40 or 50 cents roughly right now, whereas the Canadian markets is about $4.50. So these are very cheap on a per share basis and also on a market cap basis, which makes me fairly attracted because I like cheap stocks and cheap companies, because even though it doesn't make a difference with the company itself, I want to buy more stock. Obviously, guys. Obviously. But there are some important things to realize. First of all, the price to sales ratio, which is the market cap divided by its total revenues, is at 8.35 right now, which means for every dollar in revenue the company earns, you only have to pay $8.35 to buy that dollar in revenue. Now you might say, isn't this a little bit high? And yes, it is, but when we go into the catalyst section of this video, I'm going to explain why that's actually very low for its growth prospects and very low for the infancy that it's in right now currently. In addition to that, guys, their gross margin is about 54% currently, and 54% is very attractive, especially given that this company is, once again, guys, in their infancy. They have executives and they have one superstore and a couple of dispensaries that they wholesale to. Besides that, they don't have much, and therefore, as they expand, they're going to gain economies of scale, and once they gain economies of scale, they're going to be able to increase that gross margin to something more attractive, and 54%, guys, is fairly respectable. I like 54%. But I do think it can go higher, possibly to 60, perhaps even 70% if they play their cards right. And so we're going to get into that later on in this video as well. And the last thing I want to touch on in terms of the overview is that they're in a good position financially. They have a good amount of cash on their balance sheet, nothing special, but a good amount. And their total debt only accounts to about $11 million. Yes, I said 11 million, not billion. million. For a company, guys, this is pocket change. And yeah, the revenue is only at 60 million right now, but they're anticipated to grow 100% year over year in 2021, and they're going to be expanding throughout the United States so quickly that honestly, I don't think this debt is really a burden on them whatsoever. It's not an industry that I think is going to go away anytime soon or really face a recession, so I'm not worried about that debt piling up or somehow sneaking up behind them and taking the whole company under. Alright guys, so with that being said, let's get into catalyst number 1, and that's that they're growing insanely fast right now for how cheap they are. So in the beginning of this video, I said that they have an 8.35 times price to sales ratio, which again means you have to pay 8.35 times their sales in order to buy the company. Now this might sound expensive, but let me break down the numbers for you so you can really understand it. So if you look at their numbers, they're planning on actually growing out to 8 stores in the entire United States by 2025. That's their 5-year growth plan set out in 2020 by the management team. Well, if they grow to 8 stores in major cities as they're planning on doing, because they explicitly said they want to get into major cities, well, that means their revenue is probably going to be 8 times what it is now, assuming each store does the same amount of revenue, which I believe on average it probably will do. And even if my numbers are a little bit off, the math still makes sense. So let's say they're all the same amount of sales per each store, and they expand to 8 stores in 5 years. Well, if that's correct, guys, that means in 5 years their price to sales ratio is going to be 1, not 8, 1. Now let's not only assume that their same store sales are going to be stagnant, but that they're also going to increase while they're expanding into new markets. Let's be conservative. That might mean that in 5 years from now, their price to sales ratio might actually be 0.9 or 0.8, possibly 0.7 if they really grow well. In other words, this essentially means that their price to sales is incredibly undervalued. Usually when I look out for another company, when I look 5 years out, I'm looking for a price to sales 5 years out that's under 3 or under 2. Sometimes I get under 1, but that is very, very rare. And usually those companies that I get under 1 aren't really good, attractive companies. This company is, and here's the thing. Do I see them building 8 stores? Yes, because they already have California on the way, a superstore in California. They already have dispensaries in California. They have dispensaries in Nevada. They can keep expanding in terms of dispensaries. They can keep expanding in terms of superstores. They're wholesaling. It's a beautiful way that they're going, and I love to see them grow. Last thing before we move on to the next catalyst, Peter Lynch is one of my idols in terms of investing. I have a bunch of his books back there. And one of the things he talks about a lot, fairly frequently in his books and in his interviews, is how Walmart is a stock that a lot of people missed out on because Walmart had a great growth rate for the first 10 years after it IPO'd. But what he said was, a lot of people think that just because a company's growing really fast and that because they missed out on an opportunity, they can't get another opportunity with that same company. So he mentioned that Walmart, after 10 years of IPOing, actually increased people's monies about 30 times. Okay, if you bought Walmart after IPO, 10 years after IPO'd, you could have 30 extra money. Now, what's my reasoning in saying this? What's my point? My point is, guys, yeah, this company might seem like it's everywhere on YouTube. This company might seem like an obvious choice for the very long term, but I think people are missing out the potential for growth because even though Walmart was 10 years from its IPO, it still had a lot of states to go to. It still had a complete other continent to go to, at Europe, and at Asia, and all these different places. People, I think, are forgetting that Mary J can not only just be in Nevada. Okay, it has to go to other states. Once it goes to other states, it goes to the U.S. Once it goes to the U.S., it can expand internationally and go to smaller cities and suburbs. Once it goes to suburbs and smaller cities, it can go to other continents. And so I'm looking at this, I'm saying, okay, this might be a stock I go to my deathbed with, because this stock is beautiful, it's attractive from a financial perspective, and I just don't see the growth slowing down for a very, very long time. All right, guys, catalyst number 2 is very, very simple and very short. Acquisition. It's a $500 million company. Cigarette companies like Altria are really struggling right now, and I believe that a cigarette company's best move might be to buy Planet 13 for only $500 million. It's not that much money for a big conglomerate like Altria, and also if they bought this company, they would be now into a growth industry as opposed to a dying industry like cigarettes. I'm aware that Altria has other business segments that are growing very quickly, and actually I own Altria in my portfolio, but the point is that Altria would be in a much better position if it owned Planet 13 with its management team right now. So I wouldn't be surprised if a big company comes over and says, I want a piece of you, here is some money, bye-bye. And well, I'm hoping for that, guys, because an acquisition means that they have to also buy the shares at a premium, which means they're actually going to buy my shares for a lot more than they're actually currently worth right now. My apologies, guys, for that one, because that might have been a little bit of a mood kill. I know acquisition, saying there might be an acquisition isn't really a catalyst, but in my humble opinion, I believe it is because of how cheap it is. But this one, I don't think you guys are going to be mad at me about. I think this one is going to be a beautiful catalyst that no one's really considering, and it's something I deduce from reading the reports and reading some of the presentations that the management team has put out on its investor relations page. So catalyst number 3 is that this firm is redefining how we enjoy sports and entertainment. So I want to show you guys the presentation from the company right now, and I want to show you guys what I saw and why I believe that it's going to redefine entertainment. Alright guys, so right now we're on their presentation for why I believe they're going to be changing entertainment. So if we look here guys, Superstore additional attractions, I hope you can see that title. My face might be in the way, but you can see this for sure. Coffee shop and restaurant for their Superstore additional attractions. Experimental in-house production. Not sure what that means exactly quite yet, but we'll see. And then event space. So here's what I'm thinking right now, just so you can get into my head a little bit. Coffee shop and restaurant. This could possibly mean, let's imagine that they have a smoking lounge inside of their actual main store. What they can also do is during sports nights or during, game nights, whatever it might be, NFL Super Bowl or NHL Stanley Cup Finals, whatever it might be, they might have a restaurant bring in food to their smoking lounge. Or you might be able to smoke and then go over to their restaurant or coffee shop, drink, a nice coffee or have a bread cake, whatever it might be. And the reason I'm thinking this, guys, is for a couple of reasons. Number one, these images imply just that. They imply that there will be a coffee shop and a restaurant there so that they can attract folks over to their smoking and then they can go eat, or vice versa. Something I did not make clear when I was recording this video, guys, is that they do have a coffee shop and restaurant right now currently at their Las Vegas Superstore location called Perk. What I am trying to say in this part of the video is that they could actually become a real estate company that actually gets these restaurants out to franchisees who want to use the name and the brand in order to operate it within their own store. So that could actually make them a real estate company because they don't own and operate their own restaurants. They have somebody else do it for them. So keep that in mind while you listen to the rest of this video. Right? Maybe they got some munchies. They want to go eat on some crackers or something. I don't know. Some wings, rather. Event space. Okay, I see a bar back here. I see a television. I see some seats. Okay, what can they do here? They can smoke. They can eat some buffalo wings, watch the game, watch the baseball game, watch the football game. Now, why am I thinking about sports so much? Here's why. The reason is because over here they say in their 5-year U.S. objectives, if a city has, let me just zoom in a little bit for you folks, if a city is affluent enough to support a major sports team, Planet 13 is interested in opening a premium cannabis store. Okay, that gave it away right there, guys. The point is, guys, they're going to be expanding into cities with sports teams. And if we look at all of the cities they're looking at, I'm pretty sure all of these cities that I'm aware of have sports teams inside of them. So guess what? You go to a city with a sports team, beautiful. You open up a cannabis store, you might actually want to have a restaurant there with a smoking area where folks can come in, watch the game while they're smoking, get some wings when they're done smoking, or have the restaurant bring over some wings into the smoking area. I see it as a great business practice. I don't see this going wrong whatsoever. There's one thing I omitted to say from their presentation, however, and that's that maybe they can become a real estate company, guys. In a weird way. They might have some real estate. They might rent out to Starbucks. They might rent out to some entrepreneur who wants to open up their own Dunkin Donuts or some other brand. Or perhaps they might own their own restaurant, their own coffee shop. I don't know where they're planning on going, but what I do know is wherever they're planning on going, I kind of like it, and I'm very intrigued to see where it goes. I see it as good business practice to have a place where people can come eat, where people can come drink coffees, and maybe they can see the store. Maybe you can say, I'm intrigued because I'm already here. Or maybe vice versa. Somebody's in the store for cannabis, and they say, oh, I kind of want a coffee right now, or oh, I want some wings. And then also you got the nightlife. You got a smoking lounge. Have a couple people over. Have them bring their friends. They can have some wings. Maybe have a bowling alley. I don't know what's going on, guys. But what I do know is that it's very creative. I think there's a need for it because there hasn't never been a thing that I'm aware of where you're able to smoke Mary J while watching a sports team. It's kind of like a smoking lounge, a smoking bar, if you will, for people who want to watch sports. Haven't seen that yet, and so I'm very excited to see what's going to happen with this. Alright guys, so before we finish off this video with a quote of the day, I want to say I spent a lot of time making this video. I'm going to be editing it after I finish recording this video as well. I'm in college full-time, taking a double major and a minor, and I'm also having a part-time job right now to support myself and to be able to buy a house when I'm done with college. So if you appreciate all that work, please smash the thumbs up button and the subscribe button because it means a lot to me. It makes my effort feel warranted. But that being said, here's the quote. Here's the quote, guys, and that's that. well done is a lot better than well said. All right, guys, have a great day. Bye-bye.